Okay, so we have a nation-building portfolio of industrial minerals, copper, gold, coal, power generation, and the reason we've got that is basically because Papua New Guinea imports absolutely everything. So I'll take you through that in a moment. So if you can imagine, every piece of infrastructure in the country comes from imported cement. There is no clinker cement plant in the entire country for 8.3 million people. Energy, only 13% of the country is electrified, 87% of the people are in the dark, and out of the 13% that have access to electricity, we have something like half of that is imported heavy fuel oil and diesel, which is the highest cost energy you could possibly get. So we're essentially there in part to assist in nation building in cement, steel and energy. Without those three things, you basically can't build a country. Some people have some concerns about the jurisdiction. I would like to highlight, ExxonMobil doesn't need any introduction. They've spent $20 billion just recently in the country, and they're about to spend with Total and Oil Search another $13 billion. So they've obviously successfully been able to make that jurisdiction work for them very successfully. And also you've got the likes of Newcrest that are already owns one of the fourth largest gold mine in the world there, Lahire, and they're looking at a $5 billion investment with Harmony, with Wafi, a copper gold asset. So I guess what we're showing is that there is money going into the country. We selected this jurisdiction as a investment destination for us. We are a little different to some other juniors in that before we listed this company, we put $20 million of our own money in. So this isn't a managing director's role for us. This is a very large family investment for us as well. So from an alignment point of view, we're heavily aligned. It's a Westminster system, so it's well regulated, and there's a big opportunity moving forward by multiple agencies looking at the future trajectory of the country. So if we look at where our key assets are, lime and cement, industrial sands, power generation and coal are one. Copper gold for us is non-core, but we do have some amazing assets. But I would suggest don't be surprised if you see that spun out of the Mayur Resources portfolio at some time in the future. What this slide shows is just the location. As you can see there, we're all on the coast. Papua New Guinea is quite a rugged terrain. We are close on the coast to all areas, and we do that because it's cheap development. And you can see that the copper gold portfolio, as I said, will likely sit quite separate in the future. We'll be wholly and solely focused on building materials and energy for the country. The two key projects that we have at the financial investment decision, so that means they've already got environmental approval, already have bankable feasibility studies done, have construction bids in, or is the power project and the lime and cement project. I won't go into management. Suffice to say that we've all had a track record of developing multi-billion-dollar projects for billionaire entrepreneurs as well as the likes of BHP and others. So we, one, know what we're doing. Two, we've got a track record. And three, we've put, as I said, $20 million of our own money in before we went to the market. Looking at the primary project, just go back, sorry. The primary project, the key here is that we are a first mover. We have a monopolistic position and a first mover advantage building the first and only cement plant for the country, and quicklime plant. So it's also very scalable. Giving you an idea of size and scale, you can see Port Moresby, the city, 25 kilometres. You've got the $20 billion PNG LNG plant, and we're 7 kilometres from that, right next to the gas source. So very strategic location, right next to deep water. When you look at this is just the tip of that Kiddo deposit you see there. There's no strip ratio, 100 metres thick, sticking out of the ground resource. You've got something like 400 million tonnes there, more than enough for hundreds of years of development. We'll be building a 1.6 million tonne facility, essentially that will satisfy 100% of Papua New Guinea's needs, but also then taking a dominant position in the Australian market. So we've got a wharf, power plant, clinker cement, quicklime, raw materials, etc. It'll be all contained on the one site, which is very similar to the way Exxon operates. It's ring fenced. It controls all of its operations quite successfully. So what you see there is this picture really is what I'd call the money shot. Number one is that we're displacing all of the imports coming out of China and Japan. They will then stop coming into Papua New Guinea, but then you also have all the east coast of Australia. So people might not be aware that the east coast of Australia is importing 4.5 million tonnes of cement a year from China, Vietnam and Japan, and that is continuing to grow. Their youngest plant's 25 years, their oldest plant's about 55 years old. They will be shutting down, and as they continue to shut down, imports will increase. Now, reality and logic will tell you that if you can buy cement from somewhere that's 3 times closer than they're currently buying it from at the same quality and at a lower price, they will buy. And that is the reality for us. We're 3 times close to the market. It's 5 to 7 day sale time versus 19 to 22 day sale time, which is what's currently happening at the moment. Why? Because they haven't had any alternative. We now become their next best alternative. So we've been able to offer into the market to beat any imported price just because of the scale and distance and proximity to market. So we see that as a foothold not only for the first line, which I'll show you the economics on, but also for any future growth. Very similar story with quicklime. Quicklime's being imported out of Thailand into PNG. That's used largely for alkalinity control. It's also used in the alumina sector, and there's a big opportunity there to break into the Australian market. That has not been factored into our economics. That is just blue sky upside. So if you're looking at IRRs and paybacks for what you'd call an industrial minerals commodity, it's extremely attractive. You look at on a geared basis, 39% IRR, 397 million NPV. Let's call it 600 million Aussie. We currently have a market cap of about $80 million, and that's only one of a couple of projects that we've got. We're in the process with KPMG and Morgans at the moment to raise the equity component of that. We're not raising that at the listed level. To be clear, the objective is if you're a shareholder in Mayur Resources, my objective, being the largest shareholder, is to limit dilution. And in limiting dilution, we want to maximise the economics of the project. So by being able to come back and say to shareholders, we have a fully funded solution. We're not asking you to put your hand in your pocket. We're not going to dilute your shareholding. And by the way, the economics that we've retained is 7 times the current market cap of the company, is going to be a very good look. So, that is the intent of how we've structured this entire portfolio. This is just our community engagement. I'm not going to go into a huge amount of detail in that. This is our flagship project. So from the perspective of what's happening, increased electrification, as anyone knows, the higher the electrification of a country is a direct correlation to the GDP of the country. The lower the electrification, the lower the GDP. There's billions of dollars being put in to electrify the nation to take it up to 70% electrification from currently 13%. So there's going to be a large increase in GDP, and everyone also knows that there is a direct link between GDP and cement consumption. None of our economics actually factor increased GDP. It's just what the current demand is. So all the forecasts, revenues you've seen are very conservative because on a current demand basis, not future demand. I'm just going to touch just for 30 seconds on the other projects. We have a mineral sands project at Orocolo Bay, 200 kilometres west of Port Moresby. It's got 106 million NPV. We have a fully funded solution from the Chinese. We're not asking shareholders to put their money in their hand in their pocket. We're currently building that plant at the moment. It will be operational by next year, and by the end of next year, expecting it to be into full production. Generate something like 60 million in revenue a year, 20 million in profit. The total capex of this is about 20 million bucks, so it's an extremely high return project. I'm not going into a lot of detail around it just because it's fully funded, and if you want to know more about it, I'm more than happy to take it offline and have a discussion. But There's essentially 4 products that come out of that mineral sands, and it's a very simple mining process, as you can see. All the work's been done, thousands of holes, environmental approval achieved. As I said, we're building the plant at the moment. Finally, the energy side of it, we control all of Papua New Guinea's known coal resources, 200 kilometres of coal sticking out of the ground. You can see it there as an example. We've only drilled 1% of that entire deposit. So from a strategic energy play point of view, when a country's only got 13% electrification, it's extremely encouraging. So if you look at that, you can see there's a target of 70% by 2030. So there's 11 years to electrify up to 70% of the nation. You look at every other country's energy mix, whilst there's a huge focus on solar and hydro and renewable, coal and gas is still number 1 around the world, and that's reality for the next couple of decades to come. So, I think Buffett's got a couple of plants here. They've already been forecast. They're not going to shut until 2040 at least. China's, just to give you some stats, Southeast Asia is installing 1.5 million megawatts of coal-fired power in the next 20 years. And just to give context to that, Papua New Guinea is 600 megawatts total for the entire country, 600 megawatts, and what we're proposing is only 50 megawatts. So it's only a very small in the scheme of things, but has a huge benefit for the country. So that's I guess from our perspective, that's what we see as a big opportunity. You see the power plant site, bankable feasibility study done, environmental approval done, power purchase agreement submitted with the government waiting for sign-off, and we're right next to the industrial hub that's prolifically using imported heavy fuel oil and diesel from Singapore. So a much better environmental outcome, a lot cheaper, a third of the price. Bit of a no-brainer of a project exercise. That's just a rendition of the construction contractor's plant. I would just suggest if you're interested in the company, I think we're trading around 50, 55 cents. One of the brokers, Bell Potter's, got a target of $1.20 on us, and that's after discounting by about 70% future revenues. So there's a good story, good upside. We see this as a potential future $3 stock plus, and we've got projects that are at the bankable stage in the funding stages as well. So if you're looking to get some exposure in a growing economy where it is guaranteed only to be going north, really in a country that doesn't have anything, and you want to be involved in nation building company, we're the company to have a look at. So thanks very much for your time.